Welcome back to Metals, Money, and Markets, the April 6th edition. For MiningClips, I'm Rob Goodman. With me, as always, Mickey Fulp, the Mercenary Geologist, will break down the info. Okay, Mickey, talks of tariffs again. You got some disappointing numbers. Let's get right into it here. Gold and silver actually hung in there, but the rest of the metals weren't in too good a shape.
This is true. Trump tormented the markets once again with all his trade tariff talk overnight. We had a really good day in the markets yesterday, but today, combined with bad job numbers and the continuing Facebook saga with one third joining the delete Facebook program, myself included, gold was flat over the week, actually up $8, finished at 13.33, but it probably had to do with the fact that the dollar was flat over the week. Silver rose 2 cents to close at 16.35. The platinum metals both had bad weeks, likely to do with their conjoined at the hip with the auto industry. So platinum lost, $15 to close at 9.14. And the real loser was palladium, was down $49, a 5% loss. And we told you this was going to happen. It was so overbought in mid-January, closed at an all-time high of 11.29. Probably we should note that the platinum to palladium ratio, as we predicted, is now above 1, sits at 1.02.
And meanwhile, copper there eked out a gain as well.
Yeah, copper was really oversold last week when it went briefly below $3, closed at 3.02 last week, gained 3 cents this week to close at 3.05. So it bounced off an oversold paradigm. One thing we should look at is the Baltic Dry Index is below 1,000 for the first time since August, and the copper price is 3 months backwards. And this all has to do with this trade talk and people's fears about what may happen, and also the volatility in the markets.
And moving over to the energy markets here, where uranium actually stopped the bleeding, but boy, oil had a rough week.
Yeah, oil had a really volatile week. It went from $62 to $65 back to $62 today, closed at 61.97 for a 4.5% loss, despite lots of good news in the oil patch. And this is basically people are nervous because of this trade talk. Last night, it broke support at $63. Despite the fact that in the Permian we have a pipeline bottleneck. Now that's going to be somewhat negative for U.S. oil markets, but we have the EIA coming in with a tightening supply-demand balance. U.S. production is climbing week after week. Inventories are down big time this week in the U.S., and the rig count was up, and imports are less than 8 million barrels a day over the last 4 or 5 weeks. So based on all this, you would think the oil market would be looking healthy, but it's just really volatile because of fears of a trade war.
And over to these currency markets, as you mentioned, a relatively flat dollar, and loonie, I guess, had a little bit of a gain.
Yeah, the dollar was flat. Euro, of course, would have been flat too. The loonie was up from its very oversold situation over the last couple of weeks. It gained almost 1% to close above 78 cents for the week. Since we're talking about money, I'm going to tell you that something that is not money, and that's Bitcoin. Bitcoin in mid-December was valued at $19,343 per Bitcoin. It is now valued as we speak at $6,603 for a 66% loss. It is not money.
And heading over to these markets here, where today was quite a turbulent day and everything got red.
Yeah, it was a really bad day for the markets after a really good day yesterday. At one point today, we were down 700 points on the Dow, made a rally toward the end. Just a really volatile week with the VIX above 20 for most of the week. So, we're looking at volatility double what it was a couple of months ago. At one time today, in the bottom of the markets, all major indices were negative for 2018. Now, the NASDAQ made a rally and closed above, but not a good day for any of the stock markets. Dow closed at 23,933 for 0.7% loss, less than 200 points though from last week. S&P 500 still in good territory at 2604 for 1.5% loss. Nasdaq closed at 6915. It tested its yearly low, which would have been 6903 a couple hours before the market closed. But all the markets came back toward the end of the day. Let's put this in perspective. We're still looking at a very marginal market correction from the all-time highs and that these three markets set anywhere from a month and a half to 3 or 4 weeks ago. The Dow's down 10% from its all-time high. S&P 500 hadn't even made a market correction yet, down 9% from its all-time high. So when you put this all into perspective, this is just a normal market correction.
And wrapping up with the venture here, the slide continues.
Yeah, there's nothing good to say about the venture exchange. Down again to 769 for almost a 3% loss again over the week. That index is down 18% from its high in mid-January. Volumes are 1/3 of what they were in mid-January. There's just no hope in sight that I can see for this market. We'll just have to go from here.
Okay, Mickey. Appreciate the insight as always. Keep our eye on the wire and enjoy your weekend.
All right. Thanks a lot, Rob.